Hello traders, you are welcome back to the Forex Geek channel. In this video, we're just going to be breaking down one of the most powerful and precise trading strategies, which is the 1 minute breakout strategy. So if you are looking to catch fast and accurate market moves, this is the ultimate strategy to have in your arsenal. Stick around, and by the end of this video, you will have a clear step-by-step guide to executing perfect breakout trades. All right, let us just get into it. Before we look at the strategy itself, let us understand the concept of breakout. Okay, so a breakout happens, a breakout happens when price breaks through a key support or resistance level. All right, when price breaks through a key support or resistance level, that is what we refer to as a breakout. So in this particular example, you can see that price was consolidating within this zone, although there was a sort of downward slope at some point, but then eventually we had a breakout both from the horizontal level and from the downward trend line. We had a breakout around this zone because a breakout happens when price moves away from a support or resistance. It comes out, it breaks through with momentum from a support or resistance zone. So this often signals the start of a new trend, making it an ideal opportunity for traders to enter a high probability trade. Now, to identify the best breakouts, we start by marking important price levels, just like I have done. These levels should come from these levels could actually come from higher time frames, or you can even mark those levels on that particular time frame that you want to trade on. Okay, but it is even better when it's coming from higher time frames like the 5 minutes or the 15 minutes. That is if you are trading on the 1 minute chart. All right, so if you are trading on a 1 minute chart, you can just go to the 5 minute or the 15 minutes and mark important support and resistance levels. Okay, that is going to guide you on the 1 minute chart. All right, so once price approaches these levels on the 1 minute chart, we look for consolidation patterns such as flags, triangles, or rectangles. These formations indicates that a breakout is coming. Now, let's talk about entries and exits. Okay, to enter a trade using this strategy, the first step is to wait for a strong candle to close above resistance. All right, that is if it is a breakout to the upside, you have to wait for a strong candle close above resistance. Okay, that's for buy trades, or a strong close below support. That's for a sell trade. All right, fake breakouts happen often, so always wait for confirmation before entering. Now, the second step is to check volume. All right, the next step is to check volume. A breakout with strong volume is more likely to continue moving in your favor. For example, we can see what happened here. You can see that there was a breakout around this zone, and look at how there was a spike in volume. Can you see the spike in volume? So whenever a breakout happens with a spike in volume, there is a chance that that breakout will continue, just like what happened here. So that's the reason why it's very important to check volume. All right, so if you enter a sell, for example, after this breakout has been confirmed, you can now set your stop loss above the previous swing low, or swing high, that's for a sell. You set your stop loss just outside the breakout level. The breakout took place around here, right? Around here. So if you enter your sell, you can set your stop loss just above the breakout level, and then your take profit can be around key support zones. That is for a sell. But if it is a buy trade, maybe a buy breakout, if it is a bullish breakout, after the breakout has been confirmed, we can see there was actually a little spike here. So if after the breakout has been confirmed, you can enter your buy, set your stop loss below the breakout level. Your take profit can now be around key resistance zones. Okay, make sure you have a good risk to reward ratio. All right, the minimum that I recommend is 1:2. So if you are risking a pip, you are targeting at least 2 pips. Realistically, if you are risking maybe something like 10 pips, you're targeting at least 20 pips for profit. Okay, but just ensure that you set realistic targets with a risk to reward ratio of 1:2. If you do not have a good risk to reward ratio, you can just stay out of the trade. All right, so to improve your accuracy, you can add other indicators. All right, you can add other indicators to confirm, your signals. You can add other indicators to confirm your signals. It's very important to get confirmations. Confirmations actually go a long way. One of the indicators that you can decide to add for confirmations is the average through range, the ATR. The ATR indicator is actually one of the indicators that you can add. It helps determine the best, stop loss placement. And remember that this indicator is going to tell you whether momentum is actually increasing. For example, we can see that as this sell breakout took place, this indicator helped us confirm the momentum as it was rising in value, the ATR. Remember that the ATR helps us to know when momentum is strong. All right. And you can see that here again, after this bullish breakout, you can see that initially the ATR was rising after this particular bullish move. But then at this point, it was dropping. So if you had taken this breakout trade, you should be cautious because this ATR did not exactly support it. As you can see, the ATR value declined. So momentum was not exactly very strong. And maybe that is the reason why the bullish move did not last for long. You can see that at some point when it got to this resistance, it got rejected. And then shortly afterwards, well, there was a significant consolidation and then we had a reversal. And you can see that here, the ATR confirmed this sell move. It was rising in value, showing strong momentum. And here again, it was rising in value, showing strong momentum. So pay attention to ATR as well. And then you can also add moving averages to the chart. You can decide to add maybe the 20 EMA, since this is the 1 minute chart, to confirm the overall trend direction. All right, so that you avoid trading against the market. So ensure that price is below the moving average when a sell breakout happens, and ensure that price is above the moving average when a buy breakout happens. Using these indicators together boosts precision and minimizes fake breakouts. So this 1 minute breakout strategy is perfect for traders looking for quick, high accuracy setups. Mastering these steps will give you a serious edge in short-term trading. If you found this video helpful, hit that like button and subscribe for more trading strategies, tips, and live breakdowns. Let me know in the comments what strategy you want me to cover next. Thank you for watching, and I hope to see you in the next video. Happy trading.